Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Brian McMullen, fixed income strategist, ETFs and Indexed Strategies at Invesco, to discuss fixed income fund flows and how investors can utilize Invesco BulletShares ETFs in their portfolios. Brian, it's great to see you as always. Welcome back to Trade Talks.
Thanks, Jill. Good to see you too.
You got it. Give us a quick update on what you're seeing in terms of fixed income markets since the Fed's FOMC meeting last week.
Sure. Well, we've really seen some big moves in the bond market over the past week. I think especially, after investors have really begun to digest some of the key takeaways from the FOMC meeting, but I think even more importantly from Chairman Powell's press conference last week. So, we've really, I'd say probably for the better part of the last 18 months, I think the market has really been fighting the Fed's narrative of higher for longer. And, I think really underappreciating the risks that yields are going to need to remain in restrictive territory for a prolonged period of time in order to get inflation back down to the Fed's 2% target. So, we've definitely seen some repricing in the bond market this week as U.S. Treasury yields really from kind of the 10-year to 30-year portion have increased anywhere from 20 to 30 basis points, while you've seen really the front end of the curve remain basically unchanged to maybe slightly higher. So I think the message here is really that we're going to continue to see this type of volatility in the near term as the market continues to digest this news. And I really think until we get a better gauge of the true impact of tighter financial conditions and its overall impact on the broader economy at large.
Brian, what are you seeing in terms of fixed income ETF flows?
It really remains a fantastic year for fixed income ETFs so far. We've seen over $130 billion coming into U.S. listed fixed income ETFs so far this year in 2023. You put that into context, fixed income ETFs only make up about 20% of overall assets in the ETF marketplace, but they've accounted for roughly 40% of total inflows so far in 2023. So a really impressive year so far. But that's interesting because the last few weeks, we've actually seen quite a big shift in the composition of flows into fixed income ETFs. So for most of 2023, we've seen fixed income ETF flows really being dominated by the aggregate bond category. So meaning that flows have predominantly gone into either US Treasury or investment grade corporate bond ETFs. And so on a year-to-date basis, that still remains the case. But if you look over the past few weeks, we've really seen flows shift into shorter duration strategies and more specifically floating rate strategies. So, here at Invesco, BKLN, our senior loan ETF, it's seen over or just around $1 billion of net inflows just in the past month. And so when I think about that, I really think it's very reflective of where investor sentiment is right now, just around this Fed higher for longer messaging around interest rates. But, when I take a step back, I look at 2023 a little more holistically. I actually think that the one area where we continue to see outsized flows into is really our suite of BulletShares ETFs. And I think the main reason for this is really because investors are looking for ways to participate in this higher interest rate environment, but they're really trying to do so with greater visibility on future outcomes and really trying to control for interest rate volatility and overall interest rate risk that's still definitely present in the current market environment.
Well, tell us more about the BulletShares lineup at Invesco.
Sure. So, BulletShares ETFs were really designed to provide investors with an experience that's very similar to owning an individual bond, but really trying to combine that experience with all of the benefits that come with the ETF vehicle. So, if you think about why investors like owning individual bonds, it's really for that aspect of predictability. It's that aspect of visibility that an individual bond provides for future cash flows and future return streams. If you buy an individual bond, you hold it to maturity, you're simply clipping the coupon and you get that principal or that par value back at maturity. So it's taking that aspect of visibility, that aspect of predictability, and combining it with the diversification, transparency, liquidity, low cost benefits of the ETF. And when you think about how BulletShares portfolios are actually structured, essentially we're taking bonds and we're allocating them into the BulletShares portfolios according to their effective maturity dates. So, for example, if you own a 2026 investment grade corporate BulletShares ETF, you're looking at a portfolio of bonds that's all going to have a maturity date or they're being priced to a call date in 2026. Once those bonds are allocated according to that effective maturity, our goal, our intention is we're going to hold those bonds through until their final maturity. And it's really that hold to maturity aspect of a bullet share that allows for that more predictable and defined outcome for clients, I'd say, especially relative to some of those traditional bond ETF or bond mutual fund structures that are going to be naturally selling bonds prior to their final maturity.
And finally, Brian, how do you typically see clients using bullet shares in their portfolios?
Yeah, I'd say we see clients using BulletShares ETFs in a number of different ways. I would say that the largest use case is most likely as a replacement for building individual bond ladders within a portfolio. So, say instead of going out and buying individual bonds, clients might actually buy a handful of BulletShares ETFs that will cover the various maturity years that they're looking for, and they'll use that as really a type of bond laddering replacement. Doing so in a much more scalable, much more cost-effective and time-saving manner. So that would be one. I would say the second might be really using BulletShares ETFs as a type of liability-driven investing tool. So whether it's saving for cash flow needs in retirement, RMDs, college tuition payments, BulletShares can really be implemented to match any liabilities that may be needed to be met by clients in a future time or a future date. And then I would say, lastly, a lot of our clients tend to implement BulletShares ETFs either as a complement or as a replacement to core positions within a portfolio. So the idea here would really be just adding greater predictability to that core position within the portfolio, having a more targeted duration exposure, especially traditional compared to traditional, fixed income portfolios. But really, I would say at the end of the day, the way I view BulletShares is more of they're building blocks whereby investors have the ability to really customize that fixed income exposure to really meet whatever the investment goals or investment objectives are for that specific portfolio.
All right, Brian, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.